A Better Future with Precious Metals, featuring Monex and the world-renowned commodities research firm, the CPM Group, led by Jeffrey M. Christian.
Hello, my name is Sean Brasney, Sales Director for Monex Deposit Company. I'm here with Jeffrey Christian, founder and managing partner of CPM Group and one of the many research analysts at CPM Group. Thank you very much again for your time today, Jeffrey.
It's always a pleasure to be with you, Sean, and with Monex.
Want to start off talking about silver. Silver seems like we've been in somewhat of a sideways range for the good part of a year, trading between $24 and $28 an ounce with some brief moments above and below that range, but really have been kind of locked into this range for a while. As we got into February of this year, there was a lot of news that was starting to hit regarding silver, and the Reddit crowd talking about short positions in silver, and since then we've seen some articles come out about shortages in the silver market. And even though we've been in this sideways range, these silver shortages have actually even seen an uptick in investor demand for investors that want to take home 1,000 ounce silver bars, which is somewhat of a new trend that I've seen. And I saw a video you did on June 2nd, I think that is wonderful and really details a lot of this information regarding the shortages. Would you be willing to share some of that with us and our viewers?
In terms of overall silver in the world, there really isn't a shortage. There's a lot of misunderstanding about the data that's out there, and there's a lot of speculation about what's out there. But if you want 1,000 ounce bars, there are plenty of them around. They may not be exactly where you want. In terms of the shortages that we've seen, what we've seen are shortages of investor-sized 100 ounce bars, kilo bars, U.S. eagles, Canadian maple leafs, and rounds or medallions that are produced by refineries. And there are several reasons why those things are in short supply. One is that the demand for those products has risen sharply. The second one is that a lot of the private refineries and national mints that produce them have had issues due to the lockdown and cutbacks on their schedules and such, that they weren't able to meet it. But there's another one, which is that from 2015 to the early 2019, the demand for these silver products had fallen off something like 75%. So you had very low demand compared to where you had been. And a lot of those refineries cut back on their staffing, and they cut back on their ability to produce those bars because it wasn't there. And you even had some companies getting out of that kind of business at that time. And then the national mints, the Canadian maple, Royal Canadian Mint and the U.S. Mint, they try to produce to meet demand. And there's a lag to produce, to buy the silver, have it converted into blanks, and then have the blanks stamped and have them ready to be marketed. And it's very difficult to say, people are going to be buying 40 million ounces of silver coins this year. Oh no, they're going to be buying 180 million ounces. And we went from an enormous amount of silver being bought in coins to a very low level. And the refineries and mints geared down to that lower level, and then all of a sudden demand more than doubled last year. And they had to ramp up production to meet that demand just as the lockdown and the pandemic hit. Now, there have also been some technical problems with blank manufacturers moving their facilities and having some production interruptions and capacity interruptions because of those sorts of mechanical issues. And all of that stuff is combined to cause shortages in the smaller bars. But if you want a 1,000 ounce bar, you can find them. There's been a lot of people who have been saying that you can't find them, but we're familiar with Monex, and we're familiar with some of our other clients and companies in London and Shanghai and Singapore and New York. And there's plenty of 1,000 ounce bars around to meet demand. The problem is getting it from 1,000 ounce to those smaller sizes.
Shifting a little bit of our focus over to gold, you and I, over a few of our last sessions, have talked about the 10-year Treasury note and the rate. And anybody investing in gold should really be, keeping an eye on that 10-year rate. We saw it explode all the way up to 1.76, and it seems to be in a downtrend now. And after that 1.76 high, we saw a double bottom on gold down around that 1674 price, and it has been a beautiful uptrend since then. The trend in that rate looks like it's still going down, and it looks like there's some great potential for gold to sustain a rally over 1900 an ounce. Are you seeing some of the same thing?
We're seeing exactly the same thing. I mean, first off, the lower rates. We had a spike up in the first quarter of the year, really January and February, in Treasury rates, and that put a scare into financial markets, including gold and silver. But that's not unusual after you've had an extended period of declining rates to see that first bounce be relatively high, and now it's backed off from that. I'm not sure that rates are going back to 1% or lower for the 10-year bond, but I do think that what you've got is a better perspective on the part of financial markets about interest rates. Nominal rates are going to stay low, real rates are going to stay negative, and that's good for gold because the cost of putting your money into gold instead of into treasuries is negative. I mean, you're benefiting by having a tangible asset rather than having something that is losing value on an inflation-adjusted basis.
Now, on the flip side of that rate, if it decides to turn around and head back to the upside, it looks like it gets up and over that 1.66 level. That maybe that gives us better opportunities to accumulate gold, maybe mid 1800, mid to low 1800s. Is that a bottom target that might look like a pretty good chance to accumulate?
Our view is that we would not be surprised to see 1800 or 1820. I think the probability of that diminishes over time, but you still have the potential for some weakness in gold prices. A week ago when the price was around 1890, 1900, we had said we thought it could get back down to 1875, and it touched 1871 today. I do think there's some scope for weakness, but on the upside, you mentioned 1900. We wouldn't be surprised to see 1900 broken again. And actually, we wouldn't be surprised to see 1920 broken in the period of July into early August. You have a very active August COMEX contract. And in the last 2 years, you've seen gold prices rise strongly in July as you've had a roll out of that August contract into October and December COMEX futures. And we wouldn't be surprised to see that same kind of upward move in July into early August as this year's roll from the August contract into October and December occurs. And I think the market's geared up so that 1920 or even higher, maybe as high as 1960, is possible over the next 2.5, 3 months.
Yeah, thank you for those dates and time frames. I think it's great for investors to have something to look out over the horizon and be able to strategize with that kind of stuff. When it comes to inflation, we talked a little bit before even filming about the topic for inflation, and I know it's been out there in the news for a while, and sometimes it could be confusing or even somewhat of a yawner, but it just seems to be that the smart money out there is really talking about inflation being transitory, that it is not something necessary to worry about on the upside. But when you look at the markets and some of the chatter out there on the web, it seems like or feels like the market's trying to price in some of that inflation. And again, I know we talked about it in the past, but can you give us your thoughts on really the state of inflation and what we're looking at here over the short term?
Well, yeah. I mean, our view is in line with that of the Treasury and the Fed and other mainstream economists, that what we're seeing is transitory inflation that might last really through the rest of this year, but probably not much further beyond that. And, if you look at today's CPI numbers, this was taped on the 10th of June. If you look at it, what you saw were, oil and natural gas accounted for 25% of the increase of the inflation in May. You saw things like air transportation, food consumed outside of the home, and apparel and used cars as strong pockets of inflationary pressures. And that reflects coming out of the lockdown. People are buying clothing because they're going back to work or they're going back out into public and they haven't been necessarily buying clothes. Used cars have been strong inflationary pressure factor all year because of people moving to the burbs from the cities and needing one car or two cars or wanting three cars for their new homes and things like that. Air transportation, the airlines are trying to make up for lost time, and the restaurants are increasing their prices because they have to lure workers back into the restaurants. So these are all things that are sort of temporary bounces coming out of the lockdown. We think they dissipate over time, and that inflation is probably not all that problematic. You know, we think that other financial issues, low interest rates, a very top-heavy stock market, the prospect of some financial losses either in stocks or in cryptocurrencies. I think there are a lot of other factors that could cause investors to say, I'm worried enough to own gold. I think inflation is relatively low on our list of priorities as to reasons to buy gold this week.
I would like to kind of close out and finish with platinum. Again, you and I did some great videos when platinum was trading between approximately 800 and 1,000, built a great base down there, really looked like one of the best value trades for quite a while. You turned out to be correct again when it broke above that 1,000, went all the way up to 1,350. We seem to be in a little bit of a correction again, some back and fill, getting closer to 1,100 again, and platinum looks like the value trade all over again, anywhere between this 1,000 and 1,100. What do you think about platinum down here at these levels?
I would be an eager buyer of platinum below 1,100 from perspective of being either a short-term or intermediate-term investor, you know, from a short-term trader to say 1 to 3 years. I think anything below 1,100 is probably a good price to buy platinum because the tide is turning, you know, demand is rising. It's been a little bit mitigated by the semiconductor chip in the auto industry, which has reduced production of new cars and thus reduced the demand for platinum, palladium, and rhodium in auto catalysts. But that's a temporary factor too. Demand is rising. Supply had risen because they had some problems in 2020, but that's in the price already. I think that the platinum market pretty much is at its low or just above its low right now. And from a perspective of, you know, the next 1 to 3 years, I'd be a buyer at 1,100 or anything below that.
Thank you for that information, Jeffrey. And to remind our viewers, we're here with you, of course, because you are the author. CPM Group puts together our Better Future with Precious Metals. And a lot of the things that we're talking about, of course, can be found in these reports, as well as many of the other great reports that CPM Group puts out. So as a reminder to our viewers, please call Monex today, talk to our account representatives, and ask for the current Better Future with Precious Metals, as well as our CPM Group reports.